Hello, welcome to this session on insurance management. Here what I'm going to discuss is, supposing as a unit head you are given a target. If your life insurance policies are investment linked, by all possibility you will be given a target on the base of annualized premium. So I'll show you how I used to do the planning when I was a unit head, either a regional manager or a branch manager. So let us suppose you are given an annualized premium target of 1 million, say INR. So this is a target which needs to be divided into different parameters which are actionable. Mind you, annualized premium target is itself not an actionable parameter. So it has to be divided into 4 separate parameters. First is team size. Second is activation ratio. Third is productivity per active advisor, that is number of policies per active advisor. And last but not the least is the average ticket size, that is the premium, average premium per policy, average ticket size. Now if you multiply all these 4 parameters, what you get is annualized premium. Now what should be our team size? Let us suppose you are having 7 managers, sales managers under you. Now the ideal span of control of a sales manager is around 15. So the team size we will be looking forward is something like 15 into 7, which comes to 105. Let us suppose you form a team of advisors of 100. If you have more than that, it's fine. If you have less than that, you need to focus on recruitment. Now the activation ratio. Now on an average, it is seen all over the world, the standard activation ratio comes in between 25% to 30%. Let us take a number of 30%, although a little bit of aspiring figure. And then NOP per active advisor. Again, it usually send that NOP per active advisor ideal number is around 2. It might be a little bit less, a little bit more. If it is more, very good. If it less, then it's a concern point. Then comes to the average ticket size. Now again, it depends upon the kind of policy you are having. If it is more investment oriented, this average ticket size is likely to be more. And if it is more cover oriented, the average ticket size is going to be less. So here, let us suppose we take our average ticket size of 20k. Then what happens? Now multiply all these parameters. That is 100 multiplied by the activation ratio of 30%, which is 30. Multiply this 30 with number of policies per activizer, that is 2, which comes to 60. Multiplying by 20k comes to 1.2 million. So supposing this is done, your target is overachieved by 20%. Now, how to do it? Now you need to see what is your problem point. Is your problem point team size? Supposing it is so, what needs to be done? First, your sales managers are to be taught how to recruit advisors. First is, they need to have a list of all the people into the financial market. This list can readily be available from the net, or maybe they need to do a little bit of searching here and there. So first is prospect list of advisors or financial advisors of different financial market. Second is, the person should be taught how to sell career. It's very important for an insurance advisor to know, what is career prospect going to be, which is very important. So career selling is a very important role. Now the third point, which I have already discussed in one of my management sessions, that is empathy mapping. Why should one become an insurance advisor? So before one gives a presentation on the career prospect, one needs to put himself in the shoes of the person he is giving the presentation to. So that's absolutely important. You need to match your presentation with the aspiration level or financial goal of that particular person. So if you do these things right, there is no reason one manager shouldn't be a team of at least 15. So once you take care of this team size, next concern point would be activation ratio and productivity per active advisor. Now how to do it? So here comes performance management. The most important tool would be DSR, daily sales report. Every sales manager is to give you a projection in the morning, who are the persons they are going to meet. So what would be the kind of policies they will be pitching, and what is the expected result at the end of the day. And again, at the end of the day, you need to review like whether the person, sales manager, could meet those people, and if they could meet, what was the result, and what was the feedback, and accordingly you need to check out the planning for the next day. So here for these particular parameters, so everything depends on the daily sales report, that is the activity of the sales managers. And if you do a little bit of micro monitoring, what I suggest is, step yourself a little down and monitor the activity of the advisors as well. You have got around 100 odd advisors. So plan your time accordingly and try to monitor this movement of the 100 advisors. There is no shortcut, to have a good achievement in these two parameters. Now, let us suppose these two, and earlier I talked about the team size, 3 parameters are taken care of. Now, 4th is the ticket size. Supposing you require a ticket size of 20K, whereas your present ticket size is 10K. So even if your team size is good, your activation ratio is good, your productivity is good, if your ticket size is low, so your productivity is going to be very low. Now what is to be done? Now here the method is, first you need to see what is the quality of your advisor team. Quality of advisors. What is their family income? Less their family income, so more likely they will be approaching the people of lower income group. So quality is important, but that is not always in the hand of the manager. But what is in your hand is knowledge level of the advisors through training. So here mostly I have seen in insurance industry, the training is focused on generation of the prospect list, need analysis, and so on and so forth. But what is usually neglected is the basic theory of investment. Theory of investment. If your policies are investment oriented, does your advisor know the portfolio of the insurance policy, where the money is being invested, what is the expected return? Does your advisor know how the bond market behaves, how the equity market behaves, what are the different ratios? So if you are to increase the average ticket size, so most probably the advisor need to meet people who are investment savvy. Supposing they are investment savvy, definitely there will be questions on investment front. Here it's very essential that you need to train your advisor team, and of course the sales managers as well, about the different investment prospects, different ratios, and how the company is expected to give a better return. So friends, these are the parameters you need to take care of, and I did it successfully, and this average ticket size was very important to me. In fact, I tried to close a few super HNI cases on my own to increase the ticket size, and if you take care of these 4 parameters, so friends, there is no reason that your performance will be under the standard. So friends, with this, Joydeep Banerjee signing off. We'll meet in the next session.